Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition on Business Today and on Market Today. And the focus on our this edition will be on Bluestar's earnings. Remember, the company has reported on a consolidated and a year-on-year basis the revenue that's jumped 26.8% at 3,328 crores. The EBITDA has surged about 35% to 242 crores. The margins have also expanded for the company to about 7.26% by 44 basis points or so. The net profit, excluding the exceptional item, is substantially higher by about 85% at 159.7 crores. And the company has also recommended a final dividend of 7 rupees per equity share. To discuss and to decode these earnings for this quarter and the outlook going forward, I'm now joined by a very special person. The top management of the company, Mr. Vir Advani, joins in. He's the chairman and managing director of Bluestar Limited. Mr. Advani, good morning and thank you so much for taking the time out for this discussion. Good set of numbers coming in. But before I dive into the numbers and ask you what really worked for you and what do you foresee as the FY25 outlook, I really want to talk about the demand trends per se first. You know, there are reports which are suggesting that power prices on the exchanges have already jumped by a fourth in just 1 month. And this is being attributed to cooling systems running for longer and at full blast to beat the heat waves. And that's across the country that we are witnessing. I want to understand from you, are you also looking at this robust demand which is truly being attributed in the right way for the increase in prices?
Thank you. If you give me a minute and indulge me, I'll just talk about last year's numbers and then answer your question.
Sure.
You covered the quarter numbers perfectly. I think on a full year basis, we did well. We closed the year at 9,685 crores of revenue and 665 crores of EBITDA. EBITDA margin improved by about 0.7% to 6.9%. What is great about the results for this year actually is that we had good growth in both our B2B and our B2C businesses. If you look at segment one, which is primarily B2B, you would have seen a overall 17% growth in revenue and about a 341 crore EBIT, about 7.2%. So a little bit of EBIT improvement there. Our segment two, our B2C business, was very close, about 4,592, maybe 4,600 crores of revenue, with a slightly higher EBIT of 360 crores at 7.8%. So it's very good to see both our segments firing and contributing to the overall performance of the company. Coming to your specific question about what's happening in the market, so I have to tell you that it's all real. As you would imagine, March is a year end for most of us in the industry. There is a tendency to push primary sales, into the market. It's typical to see high inventory levels across all the retail and other channels in April and May before it starts to sort of get pushed out. But, this March and April, we've seen a record tertiary sales. We've seen a record number of people coming into retail stores to the extent I'd say April tertiary sales would have grown as much as 80% in the industry, which means that there is some shortage of material in the market. Some of us have some shortages in certain SKUs in certain markets. Of course, Bluestar has a very short supply chain because we manufacture everything in-house. So we're hopeful that we'll be able to fulfill all this additional unexpected demand very quickly. As far as the correlation with electricity and electricity consumption is concerned, I haven't done the maths. I don't know whether it's all attributed to cooling. But certainly you understand a hot summer has all kinds of levers, and I think this year cooling has contributed to some of that uptick.
Right. So actually we are in the current quarter in the April to June, which is the peak summer period as well, and the demand for your products, rises substantially in these peak summer months as well. And there is already an expectation of heat waves increasing across the country. How would you foresee the demand for this current quarter, sir, versus last year same quarter?
So you remember last year, Q1 was a washout quarter. We had a very strong beginning, April 1 to April 20th. 2023 was extremely strong. Everyone was very excited, buoyant. In fact, some of us went and produced even more in anticipation. The whole industry got saddled with inventory, and then it took us a few months to clear out. This summer, I don't foresee a similar situation already in May. The heat continues. So we obviously have a much more positive outlook for this Q1 as compared to last. But I think what's more important is look at January to June because that's the real season. So if I was to look at Jan to June 2024, I would say that I think the industry should grow by about 30 to 35%. I don't think it's going to be 50, 60, 70, which is what some of the newspapers are talking about. I think 30 to 35% growth is realistic, and we're planning around that.
Okay. And where do you see this demand to be driven from? Is it going to be the room ACs? Is it going to be commercial refrigeration? Or is it going to be both, half and half?
Sure. So, the context is important. We're in an election year, so that always throws up some surprises. So I should be a little cautious about this. But nevertheless, I think overall, our B2B businesses, frankly, what is happening is that order inflow has slowed down, and it usually does around elections. Not that Blue Star is heavily dependent on the government segment, but it just happens. That's how it happens. I think entrepreneurs are careful about spending. Companies also, are looking at the new budget. So even though we're seeing order inflow slowing down in our B2B businesses, we have a very strong carry forward order book. So we expect to grow at a healthy pace through Q1 and Q2. Our B2C businesses, which is both our refrigeration and our room AC business, I think their demand is looking very strong. As I've talked about, tertiary sales, are doing extremely well, whether it is deep freezers, room air conditioners, water coolers, busy coolers, all kinds of, all cooling products, demand has been strong. So I think you will see a strong Q1, especially in comparison to last year's washed out quarter. That's the way we see it.
Okay. Sir, could you explain to us, many people are just confused about the bottom line. They're seeing it as a decline of 29% at 159 odd crore rupees for the net profit, but we are talking about an exceptional item here. If you could just give us a more detailed explanation as to what this was for and going forward, if there is going to be any overhang.
Sure. So you recall in 2023, we had sold a large piece of land in Thane to a developer. So I think it was 170 odd crore exceptional income that we earned in the last year. Therefore, in comparison, FY24 on a full year basis at a PAT level looks flat, and at a quarter level, actually, it's a degrowth. But I don't think that's really comparable. We had declared that land sale the previous year as exceptional. And so therefore, I'd rather look at operating EBITDA as you're showing on the screen right now, which is up 35% for the quarter, and is up, actually is higher up for the quarter and is up 35% for the full year. Going forward, we don't have any other exceptional items. Of course, we raised 1,000 crores of equity in the year through a QIP. That money is being well spent, in my opinion. I think fortunately, the company has taken what I believe to be all the right decisions with this kind of money. I think our investors should be happy with the return on capital that they see. I think if you look at the return on capital on a full year basis, in spite of the large capex we are deploying, we're still able to deliver what I think is an industry beating ROC.
Okay. And any other fundraise plans that you would be planning for FY25, sir, apart from this?
No, it took us what 40 years or something to do one fundraise. So I would say that I don't think we have any near-term plans of a fundraise. I think we're very focused on operating cash flow. As an organization, we are. I have to tell you, we are very, very clear. It is EBIT margin, it is return on capital threshold, and it is working capital turns. We need to run an efficient business. That is what we're here for. That is what the market rewards us for. And we'll stay focused on that. So I think our internal accruals will more than fund our capacity requirements going forward.
So any capex funds that you have already planned for this current quarter and the next, sir?
So the full year capex plan is about 450 crores, which is roughly what we spent last year. And that will continue at this level for at least another 2 to 3 years, is how we look at it. So the 1,000 crores was actually raised with that in mind. Just to remind you, 1,000 crores raised. We believe that we would generate operating cash of another 600 to 700 crores in this capex cycle. So a total deployment of about 16 to 1,700 crores is what we felt we needed to do to meet the market needs over that 3 to 4 years, and that is what we're spending. We spent 450 last year, another 450 this year, and probably another 400 in the following year. So we're on track with our overall plan, no change right now.
Okay, so could you also give us a little bit of understanding of how the raw material prices have shaped up for you in Q4? Any impact of that you saw on the margins? We were hearing that metal prices, steel prices, copper prices have all been surging. So, what was the impact on Q4 and how do you see the prices going forward from here and therefore the margin outlook?
Sure. So actually, the whole of last year, including Q4, was quite stable as far as raw materials are concerned. In spite of all the geopolitical challenges, we were surprised that they were relatively stable. Of course, starting in April, we have seen a surge in copper prices, aluminum prices. That is, of course, concerning as we look forward. We hedge our commodities to a certain degree, and so we are, we're covered for the whole season, so we don't see any challenge going forward over the next few months. But obviously, we have to plan beyond that period. Post-season, we are seeing an uptick in overall costs. We are trying to offset some of that through our continued R&D efforts, which will contribute. But I think you will see this inflationary pressure affecting everyone in the industry post-season. It's a little early right now to see what we'll do as far as pricing is concerned versus cost takeout. But we're working very hard on that. I think we've demonstrated that over the last 3 years that we are able to offset some of the prices, and we're confident of doing the same in the coming year.
I think you partially answered my next question, and which was on pricing as to how would you be really looking at. We are seeing the mid-summer sales season going on right now. Discounting pricing, if you could give us a highlight of how things will pan out.
So the good news is that in the current season, there's been very limited discounting. I mean, already prices have been very aggressive, as you know. Ideally, one would have seen price increases, frankly, but that's not happened, and that's totally fine. I think we're all comfortable at these price levels. We've all learned to operate at these levels. So I think pricing has been stable, which is most important. We're seeing demand, like you've seen, surging, and I think that combination is going to help all of us sort of plan the rest of the year. But with this raw material cost increases, we'll have to see post-season how much we pass on to the customer, how much we absorb, and how much we can take out in terms of cost management.
Okay. Any new products or the lineup that you may be looking at coming up with, sir?
So we've done all our product launches for the year. We have only one left, actually, which is our commercial air conditioning product range. So we've done commercial refrigeration. You would have seen a whole new range of deep freezers and visi coolers in the market. We're now manufacturing 99% of all deep freezers in India in our own factories. So that's a whole new lineup that we launched. Our affordable air conditioners, we actually launched at the beginning of the season, January. So I think you would have seen about more than 50% of our portfolio is now smart Wi-Fi enabled. We're looking at heavy duty specialized applications as well. So it's an interesting product mix we have. We think it's differentiated, and we think we're going to benefit from that. In commercial air conditioning, which is the last product range to be launched, we have some very exciting products. Actually, we soft launched our centrifugal chillers towards the end of last year. These are for very large applications, airports, and the like. We've already sold a fairly large number of them to our existing customers. We're looking to ramp up that portfolio. So I think the centrifugal chiller portfolio will be new for Bluestar. Plus, we have some very interesting central air conditioning products for the high-end residential market as well. We're seeing that trend now, even though first-time buyers is obviously the focus for all of us in the market with mini splits and window units. But there's this high-end residential that is now looking at central air conditioning. We have a brand new product range for that.
Okay, wonderful. Would love to hear more on this as we progress and you see more action on this front as well on the new product line. This sounds very exciting as well as newer opportunities open up. And of course, there is a demand for the high-end luxury residential spaces, which we are constantly hearing about as well. Many thanks, sir. Truly appreciate your time with us on Business Today and for helping us understand the insights into the quarter and the vision going forward. All the very best to you, sir, on the upcoming quarters. With that, many thanks, viewers, for tuning in onto this very special edition and the conversation with Bluestar, promising outlook ahead as far as both demand trends as well as the product lineup is concerned from the company. We will continue to get you such exciting conversations around the Q4 earnings, so stand by as action continues on your screens on Business Today television.
Good morning, ladies and gentlemen. This is the earnings roundup of the fourth quarter earnings that are coming in corporate India, and today we are joined by Mr. Venkat